Hello dear students, welcome to Devika's Commerce and Management Academy. Material management, material cost we are discussing in the first class. We had introduction of what is material management or material cost. Second class, controlling of material, that is level settings like minimum level setting, reorder level, maximum level, danger level and average stock level. 5 levels we have seen. And now third class today. So today also we are seeing the second method of controlling the stock, that is techniques of material control. Material control is very much important, you know that for every organization they have to control the material, because if controlling the material is there, then automatically they can control a lot of things. So there is another method of controlling the material, that is we call it as a economic order quantity. Economic order quantity means EOQ, short form will say EOQ, very important concept this is. Remember that whenever we are ordering material, if the material is less we are ordering, definitely there will be a shortage, and which will be a breakup or which will be a stoppage of the consumption or manufacturing process of the product. So that will be there. If we order much more than that, so then what happens? We are blocking the capital, useless, and there will be sometimes expiry date or damage of material. So that is why we are not supposed to order less or more very much. It should be in between, moderate material we have to order it. So what is the moderate material to be ordered, that will be discussing into the economic order quantity. You know that whenever you order material, every time you will be paying some amount for ordering that material. There is a chance whenever we order much material, they may give you some discount. Bulk material, you get a discount. Discount means that is a savings. That is why in economic order quantity, we have to order such a material where we can get the maximum discount. In that way we have to order that, we call it as a economic order quantity. Before going to economic order quantity, you must know that what is this total cost. How do you get this total cost? Total cost, you will get it through total acquisition cost. Total acquisition cost. Suppose say 10,000 material I wanted to order it. Each material is means per unit, 10,000 units I wanted to order, per unit is 10 rupees. 10,000 units I want to order, per unit is 10 rupees. It means total is, it is 1 lakh. 10,000 into 10 rupees, 1 lakh. So that is total acquisition cost. Acquisition cost means to get that material I have to pay 1 lakh rupee. It is just for the material cost. So that is acquisition cost. Are you getting it? Acquisition cost plus total ordering cost. Ordering cost, as I have mentioned just now, 10,000 material I want to order. They are saying per material it is 10 rupees, and means it's total 1 lakh. For 1 lakh ordering cost is supposed to 1,000 rupees. If I want to get 1 lakh material, I have to pay 1,000 rupees. That 1,000 rupees would be total ordering cost plus total carrying cost. Total carrying cost means entire process, like to a carriage means transportation, clerical cost, a storage cost, and all these things together we can say it as a total carrying cost. In India, people say that 20 to 25% of material cost is here carrying cost only. So we have to decrease this carrying cost. When we minimize this carrying cost, automatically that makes a lot of difference in our production and cost of the production. So anyway, what is total cost means? Total acquisition cost plus total ordering cost plus total carrying cost. Together we say it as a total cost. This you must have an understanding. Now in short, what is EOQ? What is economic order quantity? In one sentence you can say the quantity of material to be ordered. The quantity of material to be ordered at one time is known as EOQ. The quantity of material to be ordered at one time. One time when I want to order some quantity, what is that? So that quantity of material ordered one time is known as EOQ. One time when I want to order, how much it is going to be. So this we can say it as a EOQ. Simple. Remember what is EOQ. Sometimes in competitive exams or in interview, or someone asks what is EOQ. If you remember this one sentence, you can clarify what is that EOQ. The quantity of material to be ordered at one time is known as EOQ. One time when I order it, what is that? So that is called as EOQ. There is a formula for EOQ. What is that formula? Quantity means how much quantity is required at one time. Quantity is equal to root of 2CO by I. Quantity Q is equal to root of 2CO by I. Say along with me, it will be easy. Root of 2CO by I. What is this? Q. Q means quantity. Quantity to be ordered. How much quantity I have to order? That is Q. Quantity to be ordered. Next, 2 means number 2 only. Next one, C. C is consumption of the material concerned. Consumption of the material concerned in units during a year. Say for entire year I need a consumption of the material 50,000 units. That 50,000 units will be C. Are you getting it? Entire year I want to use 50,000 units. That 50,000 units is C. Consumption of the material concerned in units during a year. 50,000 I want to use. That is C. In the same way, next O. C is over na? Next O. O means cost of placing one order. If I want to order one, what would be the one order I wanted to place? What would be the cost? That is order cost, you can say. The cost of placing one order. Simple words, order cost, you can say. Next one, I. 2CO by I. I means interest payment including variable cost, interest payment including VC means variable cost. Variable cost of storing per unit per unit. Storing per unit per year. Storing per unit per year. Means when we purchase the material, that is to be stored. If I want to store that material, interest payment means assuming that this would be the interest if I have to store it and if I have to keep it in my godown. So that interest, that we are assuming interest payment including variable cost of storing per unit per year. 10,000 units I wanted to store it for 1 year. On that, what would be the interest? Maybe 10%, 5%, that interest rate. So that is I. Am I clear? The formula is Q is equal to root of 2CO by I. Okay. Now through an example, it will be easy for you to understand. I have taken a small example. Anyway, in the coming class also we will work out EOQ problem. EOQ is very much important whatever course you are doing it. So they'll ask one question, sure. So have an understanding. So it's a small example I have taken. See, a unit of material X costs 20. Material X. So this cost is 50 rupees. And the yearly consumption is 20,000. Yearly consumption is 20,000. This is C. Consumption of the material concerned in units during the year, right? So the yearly consumption is 20,000 units. Yearly 20,000 units we have the consumption. The cost of placing one order, including the cost of receiving the material is 20. This is nothing but O, ordering cost. So this is O, okay. And the interest including variable storage cost is 10% per annum. Interest is 10% per annum. Interest including variable storage cost is 10% per annum. Per annum on what? On this 50 rupees. So 50 rupees into 10%. It comes to 5 rupees. 5 rupees is here interest. 10%. So always interest, remember, on the cost only we will be calculating the interest. Cost is here Per unit it is 50 rupees, cost is 50 rupees. On this if you calculate 10%, it is 5 rupees. Now let us put it in the formula. You can pause the video, you can work out because I have given you the clue. So anyway, continue. Q is equal to root of 2CO by I. Root of 2 into C. C is here 20,000 units. Consumption. 2CO. O means ordering cost. Ordering cost is here given 20 into 20 by I. I is here 5. Simple, you must remember the formula and what is to be placed, what is given, identify what is C, what is O, what is I. If these three, if you identify, simple. Okay. Now we can use the calculator. 20,000 into 20 into 2. Divided by 5. Root if you remove 400 we are getting. 400 is economic order quantity. Means if we order 400 units, that would be the reasonable and economic way to order the quantity. So that is 400. Are you getting it? If more than 400 means excess. If less than 400 means shortage. So economic order quantity is simple. The quantity of material to be ordered at one time. One time you can order this quantity. It would be reasonable and also you will get proper advantage. One time you can order it. Completed. Next time also you can order it 400 only. So this is saying by economic order quantity. Am I clear? In the coming class we will see one more problem related to the economic order quantity. If you understand the concept, take out any standard textbook and start working out problems. Then automatically you will get much command over the subject. Practice. Practice, 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 especially practical subjects like cost accounting and management accounting, financial management and financial accounting, income tax, all these subjects you need to have much practice, understanding the concept and practice. That's it, nothing else is there. So there are many subjects which already are prepared. Whatever may be the course you are doing related to your course, at least 50 to 80% material you will find it from our channel. Check out the playlist, take out your syllabus and match it. What is required, what is completed, use it, and don't forget to share these videos. Stay connected, practice well and have a wonderful career. Good luck.